It's another trading session and another record high for the Dow Jones Industrial Average. We're all awaiting the U.S. jobs report coming out on Friday morning. So joining me now is Tim Anderson of TJM Investments. Tim, great to have you here today.
It's great to be with you.
Well, it's another record high for the Dow Industrials Average, but we did start out with a mixed open, and it's all about earnings. So what do you make of the earnings season so far?
Well, I think it's been generally strong. And there certainly have been a few one-off issues. We could talk Under Armour. We could talk UPS. We could talk maybe a number of issues in the airline and transportation sector. But generally, corporate earnings seem to be improving. And the economy seems to be slowly grinding at a slightly better pace than it was for the last couple of years. The jobs report, if I had to guess, I would say that it underperformed expectations, and non-farm payrolls underperformed the ADP report for a couple of months in the spring. Last month it outperformed. I wouldn't be surprised to see it outperform again tomorrow.
And of course, while we take a look at the economy, marketplace watchers are going to be paying attention to the Fed Reserve and any comments that are coming out. Now, of course, when it comes to rate differentials, the positioning of the Bank of England, ECB, other global central banks are different. Today, we saw the British pound slide on a more dovish Bank of England. But when it comes to the global rate outlook, what do you expect to see?
Well, rates are going to go up. The question is timing and pace. Okay? So then the question is, well, what's the curve going to do? And the curve had been, did not maintain the steepness that it got right after the election and maybe right at the first of the year. So that really created an issue of underperformance for the financials for the first 6 months. I think you might see the financials maybe outperform the remainder of the second half this year if the curve just steepens a little bit.
Well, you mentioned financials, but I do want to get your take on the other sectors.
Sure.
We have been seeing commodities slowly inching higher since the last time we've spoken. But I do also want to see what you're seeing in terms of rotation.
Well, I think you're maybe seeing some gradual rotation into some commodity and natural resource stocks. And probably also into some heavy equipment and industrial names. Emerson Electric had decent earnings earlier in the week. If you see some, that's probably a very good indicator of really hardcore economic cyclical growth. And you'll probably start to see some more infrastructure plays like that continue to do a little bit better, and some capital equipment stocks continue to do a little bit better.
And Tim, you mentioned a key word there, infrastructure. Now, when it comes to the so-called Trump trade, a lot of people are watching to see what will happen in terms of legislation and reform. Of course, we have that debt ceiling looming ahead of us in the autumn. But when it comes to what's happening in Washington, D.C., in terms of sanctions, reform, legislation, what do you expect to see this year?
Well, the next big issue will really be tax reform or lowering of tax rates. You might not get comprehensive tax reform. You might be more likely to get a lowering of tax rates for the middle class, maybe a simplification of tax rates. So if the Dow's at 22,000 and the S&P is within 25 points of 2,500, and NASDAQ is hitting this 6,400 resistance level a couple of times this week, and you do get some movement on the tax front, there's probably more upside to the market before the end of the year than some people might expect.
Okay, Tim. Well, thank you so much for offering us your take on Wall Street as well as your expectations for Washington, D.C.
Sure. Thank you.